high season's greeting, wishing you and your loved ones a very happy Diwali. But it doesn't look it's going to be that, happy Diwali, at least at the moment for the markets. And earnings haven't been that great. I mean, barring ICICI Bank, which is reported as stellar set, if you look at an IDFC First Bank, that's been a bit of a disappointment. What's your view on the bank earnings so far? Sandeep, the question is for you. If you heard me on the
Okay, yeah.
banking sector earnings.
So banks and financials, if we combine them together, the results have been mixed. So on one side, for banks or financials who are more who were more focused on the MFI unsecured side of the business, there we are seeing stress. On the secured side of the business, there doesn't seem to be any significant stress at this stage. Uh, so ICICI Bank results were quite good. HDFC Bank results were decent. Axis results were pretty good. So I think the leaders of the banking space have been reporting decent results. So there have been some MFI stress is well known and it's been there in the news flow for some time. And the banks who have been exposed to that have had to take write-offs. But overall, if you look at the financial sector, the stress on the financial sector as at a time when there's some stress at the lower level of the pyramid is much lower than historical levels. So I think we got all used to what happened over the last 2-3 years, and that was actually a very sort of, let's say, a golden period for NPA accretion, etc., which is not the base case. The base case is that obviously there'll be some loans which will go bad, etc. So the space is decently poised, I would think that at this point of time.
Sandeep, hi, morning. So if you were to put fresh money to work within banks specifically, what's the pecking order looking like? Because even PSBs are looking quite cheap right now.
And that's true. Even like although I largely don't buy PSU banks, but Bank of Baroda results on most parameters seem to be quite strong and very well placed. So the core holdings will still remain ICICI and Axis Bank for us. On the satellite side, we did took a contrarian bet on Kotak Bank, though small exposure, but that bank's not performing at this point of time. So I think once the RBI restrictions go over the next few months, we could see that could come back. I'm actually quite I'm looking at IDFC Bank interestingly because that's one stock, a bank stock, which has fallen 35% from the top. And when we look at the results on the core business of advances or deposits or the core NPA levels X of the few extraordinary write-offs which they have done this quarter, it doesn't look bad. The stock corrected 35% from the top. So if it corrects another 5-7% today, 40% down. So at 60 rupees, I think that should be an interesting stock to have a look at.
But do you think, Sandeep, a few of these crude oil beneficiaries will be in focus today and the likes of Indigo might be able to sail through with a weak set because of this positive news?
The crude oil prices will fluctuate on a day-to-day basis, so we can't take a significant bet on daily price movements. However, I think Interglobe is very well placed in the Indian context over the next few years, given their domination of the Indian skies, the fact that uh, air travel is only going to grow and rapidly in India. And on top of that, we'll have some of the extraordinary losses due to the grounded planes and the high cost because of that also moderate over the next 2 years. So I think it's a company which should be sort of a core holding in the portfolios which we have from much lower levels. So if due to some reason because of markets or any other factor, there's a significant correction, I would like to add more rather than try to sell on one quarter's poor earnings.
the CEO Indigo as well join in, Peter Elbers, to talk about how their quarter has been and what's the visibility going forward. That chat coming up in just a few seconds from now. Other than that, I just want to see what macrotech developers could be doing in trade, because their numbers have been quite the bumper set. Sandeep, who's winning this MMR realty battle? Because now it seems to be quite a deeply penetrated one. You've got all DLF, Prestige, all of them coming to Mumbai, clearly because of, the profit margins here.
Yeah, but the space will be dominated by players who have been largely in the Mumbai market. Many of these players early also tried to get into the Mumbai market. They were not successful, but I think now they have a more longer term plan. Now, on real estate, I think the stocks have done well. Companies are reporting decent numbers. But I think if you correlate what's happening on the consumer side in terms of the slowdown and uh, sort of slightly worsening consumer sentiment, whether this real estate momentum, the way it is going for such high value purchases will continue or not is something we need to see. So I think most of the positives are in the price of real estate stocks. We should be careful on most of them despite decent reported quarterly numbers, because we know this sector's outlook can suddenly turn. So I would be cautious on real estate, not looking to buy any of the stocks in the real estate side at this stage.
Deep, coming back to the markets, and some of these stock market ancillaries have done rather well. Take a look at the numbers that have been reported by CDSL. A bumper set at that. The net profit is up 49% year on year. Revenue has jumped 56%, beating all expectations. Even UTI AMC, for that matter, was a decent set. And the other AMC companies that have reported numbers so far look quite healthy. Would you still be a buyer in some of these names, or will you wait for a dip or a correction there?
Is to wait for a dip, because many of these companies have huge operating leverage. So the profitability gets derived from operating leverage, because the costs don't move up so rapidly and when the revenue momentum is high, typically the increase in profitability is much higher. So if the overall stock market growth moderates, or if there's some correction, etc., the AUM growth for, let's say, AMCs slows down somewhat, the leverage works actually inversely also. So uh, at this point of time, most of the market linked sort of ancillary companies, like you said, seem to have factored in a great amount of positivity, and the valuations also reflect that. So if things moderate, then we could see potentially some de-rating. Longer term story obviously remains good for most of these companies, but in the near term, the valuations remain a risk.
That entry point where you can make good of that long-term opportunity. Sandeep, a question on the cement sector now, and I know that it's done nothing for a long period of time now, but do you think that itself could be a reason for it to outperform in the coming time, because consolidation has played out, and finally it does seem that the worst is over and the pricing power will come back? What's your view?
There are two, three things here. One, consolidation has happened, but consolidation is not like there'll be just two, three players. So I think it'll be at least a like 6, 7 player market, all India. That's one factor. Secondly, the supply increases over the next 2, 3 years are much more rapid than demand increase. And because the demand has been slow in the near term, that's why, because of that, the supply demand gap has actually increased rather than reduced. The thing which has helped them is continuous cost control, energy cost management, etc., where despite the fall in cement prices, they've been able to maintain profitability. But the valuations are not cheap. The valuations of the entire cement sector are very, very high, given the commodity nature of the business, despite the consolidation benefits. So I am not a buyer in the cement space, despite all the infrastructure story, etc., simply because in a commodity industry, we have to look at demand supply, and so when supply increases, cycles are much greater than demand increase cycles. It's very tough for profitability to actually revive meaningfully.
Point there, so it's going to take a bit more time. Kunal, what about some of these oil marketing companies? HPCL reported numbers. Of course, crude oil prices have been volatile, so HPCL, BPCL, etc. will be in focus on account of that. But what about the charts of these?
So I think after Friday's move, many of these stocks have come back to their previous swing lows and in fact broken below those levels also. For example, HPCL had a very good support closer to the 386 mark, and for the last 2 months, I think the month of August, from mid of August towards mid of October, the stock was trying to trade into a range where 385, 386 was acting as a support and closer to 440, 445 as a resistance. But after Friday's move, we've seen a breakdown of sorts for the stock. Now that means that maybe the near-term trend could be impacted, and this consolidation has given away in terms of a breakout on the downside for these stocks. Now, which means that on the way up, these stocks have to confirm a breakout pretty quickly above the 386 mark. And once that happens, I think then entering into HPCL and the likes of BPCL, IOC could be a better strategy. So I think it's better to try and wait out for that reconfirmation that this 386 level is taken back again on the upside, and the stock manages to close above those levels. I think that could be a point where one could look to buy. For BPCL, that level is closer to 325. So the stock has closed at 305, 306 levels on Friday. It's below the 200 moving average. So I think wait out for a breakout about 320 plus mark, and that's where one should look to buy BPCL also.
Okay, point taken on BPCL. Reliance Industries will be in focus today because it will, of course, go ex-bonus. So, there will be that adjustment that will happen on the price. But what's the view on Reliance, Sandip? It's gone nowhere. In fact, it's edged quite a bit lower. What do you think about the future of Reliance Industries?
Yeah, so Reliance is something which we actually started buying on Friday, because that's a stock that's off 20% from the top. So typically large caps off 20% from the top start presenting some value normally. And most of its businesses like oil to chemicals or retail, etc., have been depressed and should bottom out at some stage over the next few months. The big concern obviously remains their huge investments on the new energy side. But if you look at how new energy companies standalone are being valued in the market with much less scale than what, and the concerns around Reliance, so that there seems to be a dichotomy there. So even if the stock goes back to its earlier highs, which it saw earlier in the year, it represents almost 25% return potential over the next 12 to 15 months. So I think it's a decent bet at this stage.
That's the view coming in on Reliance Industries. But Naresh, what about REC? The NIM has come in at 8-quarter high, while on the other hand, Coal India has missed the mark. Anything that you would want to recommend on the charts of these two companies? And also, let's throw in a Shriram Finance because it's been a good set from the company.
Look at REC, there's a huge amount of support around this 480 to 490 mark, which has been also the low 3 days back as well as in the start of October. Also going back, and this was also the top wherein it broke out back in the mid of the year. And then the next big support comes at that 420 mark, which was the low around the election day. So for now, it is near the support, but unless we start seeing a stronger recovery above 530 levels, it's still a consolidation. So for now, a reversal above 530 is what you'll play with. Coal India has come back to the similar support zones of 430, 450 being a strong one. That's the election lows. So for now, here also would be waiting for a reversal above 480 to confirm a trend change. Finally, coming to Shriram Finance. Now, this is a stock which has outperformed the whole pack as such. Started correcting from 3600 odd levels back to 3000. 2900 to 3000 is a support level here. So from here, it could be a risk reward buy.
Sandeep, since we're talking about this entire, new energy theme, I wanted to understand what is it the anticipation is from Warrior Energies. I mean, the grey market premium indicates a 100% upside to the listing price. But did you subscribe to this by any chance?
No, I don't. I don't understand the valuations of these companies. So totally out of let's say whack about what the reality is actually going to play out over the next 2-3 years. In my view, next 2-3 years, the solar panel or ancillary industry, the oversupply is going to be so great that many of these companies, the profitability will collapse. So I think it's just people are playing the short-term game, which is very tough to anticipate.
According to you, what's the best way to play the energy transition theme, Sandeep?
So energy transition, I think from not the solar side. So I think the solar side is something which I believe the competitive advantage in India is pretty low. So whether on the other plays like on wind energy, if you find some good company at a cheaper price, maybe that could offer opportunity. Companies which provide, let's say, the new as the new energy space grows, the requirement of transformers, transmission line investments for renewable energy are much greater than traditional energy space. So I think those suppliers on the transformer side or transmission equipment company side, I think that those could be better plays where they are established companies with long-term track records.
You're not a subscribed to IPO fan, but Sandeep, seems like Swiggy is all set, although they've marked down the IPO valuation as well. But be it a Zomato, Blinkit, Swiggy Instamart, I mean, these are businesses which are here to stay, and it's clear a duopoly in this particular segment, at least when it comes to the food aggregators. Do you think when the valuation does give you comfort, both Zomato as well as Swiggy should be in one's core portfolio?
Yeah, so I think Zomato should have been. So I think the valuation did give me comfort at whenever it fell to 60 rupees, but I ended up not buying it, and after that it went up. That's a separate matter. But like you rightly said that it's a duopoly. Entry barriers are high. It's not very easy for a new player to come in and now establish a foothold. Even if they try, I think the initial losses will be very high for anyone who tries to come in. So both Swiggy and Zomato are well placed. Zomato has done much better on profitability as per reported numbers, and Swiggy is still lagging behind. They are still into deep losses, which could also moderate going forward. So I think it could be a decent IPO to participate depending on the pricing at the and the discount to Zomato at which they come at.